How would I invest $1 million right now, considering the entire market environment, consider what's happening in the entire industry, obviously with the money printing, with crypto, with Bitcoin, with the halving. Let's kind of take a bit of a balanced look and yeah, let's kind of put some ideas to work here. Hey and welcome to today's video. My name is Julian. On my personal channel here, I talk about a lot of things investing. Most of the time, Bitcoin, crypto, blockchain. Every once in a while we discuss stocks, we discuss all kinds of topics around investing strategies, precious metals and so on. Today I want to cover a topic that, well, we've kind of been building, right? We have been talking about how to invest $1,000, $10,000, $100,000. Today it's kind of the fourth video in this series. We talk about $1 million. If you want this series to continue, we talk about $10 million going forward. So let me know in the comments if you want to hear kind of the next level. Now these are all levels. I can speak out of my own experience. If you want, we can continue this and talk about 100 million. I would talk to a couple of friends, getting some strategy there. $1 billion, this is where it gets a bit tricky because most of the billionaires I know, they wouldn't share too many of those details, but I think 100, 200, 300 million, this I can discuss with friends, so this would be an interesting one. So just let me know in the comments below. I think this would be obviously interesting if you want to hear next levels on this. Key thing, you might want to watch the other videos as well, because I'm kind of building on top of this. I think this is also important. And today with the $1 million, a lot of strategies from the $100,000 actually come in. And what I mean with this, let me take out my drawing pad here and kind of draw up a couple of things. So we discussed $1 million portfolio, right? And I guess the main question in this entire question, or in this entire kind of strategy here is, where do you want to end up with your $1 million? Because let's ask ourselves a very basic question. Why do you actually invest? What is the ultimate goal, right? And for most people, the ultimate goal is to kind of live off the interest or the dividends, whatever you want to call it, depending on what you're getting, to kind of not having to work for money, right? Let's be honest. I mean, that's for most people the goal for the investing part. Because everything else, I mean, yeah, sure. I mean, at some point, let's say you get to the uber rich, it's not so much about investing to kind of work for money anymore, but it's more about, okay, who has the most money, who gets the best returns. It might also be just to preserve wealth, right? But for most people, especially when we talk about $1 million, it's mostly about kind of this question on what's the level that kind of pays you enough interest, pays you enough dividend that you don't have to work anymore. And so pretty much, we're not really talking about $1 million. We're mostly talking more, if we kind of look into, we're probably going to talk about a range of 500K, I would say maybe to 3 million. Let's kind of do this range, because normally when we get to like 4 million, we have a next step in all this, and we kind of discussed this through. But I think the 500K to 3 million, in my opinion, right, and obviously it depends on which country you're from. If you're from a very low income country, 500,000 could be enough forever. If you come from Europe, typical Western countries, North America, some Asian cities, Singapore, Hong Kong, Australia, right? The 500,000 retirement capital is really on the lower end, let's be honest. And we're gonna do some math here. The 3 million would be more on the higher end. So why is this, and why do I kind of walk this through? Well, the reason why this is such a key target, and I would really kind of set this as a minimum target, is let's say you can average, and I think that's a fair average, 7 to 8% per year. And obviously it depends on the environment, and maybe right now it is a bit ambitious. If we have a bit more of a high interest environment, this could be quite easily achievable. But so if we kind of work this through, and let's say we have 500K, well, 8% of that is 40K. So you would be getting 40K per year in returns. And normally, depending on the country you're in, but let's say you have a 25% tax on dividends, for example. So that would leave you with 30K per year after tax. So you divide it by 12, you would be at 2.5K per month, right? And obviously depends on who do you have to feed, right? If you have to feed a family, 2,500 in Europe, in North America, man, this can be really on the low end, especially with how prices are at the moment. So I think it's on the low end as a family, right? I think I checked the statistics, the average family in like North America, maybe in Europe, a family, right, is making around 3 to 4K per month after taxes as a family, right? So these generally two people, the parents working, so 3 to 4K, that's kind of, so with 2.5K, you might be a bit on the low end, so you might be stretching it, to be honest. But just kind of look at the numbers here, right? And then obviously if we go to the other end, so let's go to the 3 million. Now obviously here, well, it's very simple. That's basically 6 times the amount. So here, obviously we get quite easy. Here we're talking about 15K per month. But so obviously, depending on your returns, we're talking about 2.5K to 15K per month. And somewhere in there, let's be honest, that's where most people can actually nicely retire from. And so the very, very first question is actually, whatever target you're at, kind of, is this a target that you want to kind of keep and really kind of want to focus on? Isn't it like your retirement target, or, and that's also important, or do you actually kind of want to grow this? And I think that's very important in your kind of philosophy. And that has a lot to do with, that's important here, really, how you got here, and also your age. And it becomes really relevant here. Because obviously, the older you are, right, and the more conservatively you got here, the more of a conservative position would I take right now. And this is key. So let's go back to the $100,000 video, because at the end, I'm not going to invest into new things here, right? I wouldn't be investing in new things. So we still have the standard kind of things that we're investing here. So we have marketable equity, which is your typical stocks. Then we have basically bonds. Then we have metals. We have commodities. We have Bitcoin. And we have real estate, right? So we leave out the private equity, the venture equity. We leave out collectibles. We leave out, in this case, like the all like non-traditional kind of investments. We leave out your own business in this case, right? So we leave this all out. We really go kind of down here. And so now this is where it gets quite important. And I really want to kind of highlight that here. I guess the biggest question when it comes to this kind of amount are those assets that are non-cash flowing. Sorry, I marked the wrong ones here, because real estate is cash flowing, right? So you really want to be careful here about the non-cash flowing ones. And the reason is, it really depends on what is it that you actually want to have. If you're someone who says, look, I just need to retire right now. So I have my 1 million, or I have my 2 million, and all I want right now is I want to retire. I don't need to grow this much more. If, Julian, like if I can just make 5% per year, and I have, let's say, $2 million, right? So that's 100K per year pre-tax. So if I pay tax on that, let's say 30%, that's 70,000. If I can get 70,000 after tax per year, around 6,000 a month, man, I live like a king. Like, I don't need anything else. So all I care about is, how do I get to this kind of amount? And there, it's where it gets very, very relevant, because a major question here is cash flow right now, right? That is something that I would probably really ask myself. If you are at this kind of level and you want to retire, major question. Now, here is a big difference, big difference between $1 million and 10 million. In 10 million, you have what's called fuck you money. That means you have money. Even if you lose $1 million or 2 million with 10 million, you still have 8 million or 9 million. If you lose $1 million with $1 million, you got nothing. You got squat and squat. And that's very important. So with $1 million, where you have to retire, big difference to someone who has 10 million, or then when we talk about 100 million, big difference, right? So that's really important in the understanding here. So the major question is, do you need this to retire, or is this something that actually have been growing? And this is where it gets now to the other side. Now, obviously, you have people who are way younger, who are kind of shooting through, and where 1 million is just kind of the milestone. That was, for example, my situation when I was 30, right? When I was 30, I made my very first million. I was 29 and something. It's now over 5 years ago. And I made most of my million back then. I earned good money when I was a professional kite surfer, when I was a doctor. Then I lost a lot of money. Business ventures, business ideas, lost a lot of money. But the key thing in here was I made some really insane returns with stocks, because I started investing there in stocks post 2008, and in real estate. Some of my real estate tripled. I just got an offer, actually I think a week ago or 2 weeks ago, from real estate that I bought back then. Now obviously this is now 12 years ago, that quadrupled in value since then, right? This is insane, but this is just what, because parts on where I bought real estate, very limited. In Austria, for example, some in Germany, some in the UK, very, very limited. People don't know where to put their money, and it just tripled, it quadrupled, it was insane, right? So I put $50,000 in, made $200,000. So obviously this is, but so here was the point, right? So I just basically went through, and here, this was just where the 1 million was, but it was not a real, it was a target, but it was like, okay, let's just keep going, let's just keep doing what was happening, because I was gonna shoot through this. And then obviously in 2014, there was another topic that came in, which was crypto, right? But that's a different topic that actually didn't bring me to my first million. So that is something to really hear, really, that's important to understand. Which part are you in? Are you more on, okay, I finally reached that part and now, it's really about retiring? Or is it really about, you know what, I'm just kind of standing here and I'm gonna keep shooting through? Now let's talk about both. The easier one here is the one where you're standing here and you're just shooting through. Because here, I would probably follow a very, very similar strategy that you started with the 100,000. Which means, get good beta into your portfolio, diversify, right? So get some marketable equity here, invest into some really, really good kind of stocks. Probably, I would put less into peer-to-peer lending. Probably, here, you really need to think about getting some bonds. Could be like either some investable grade corporate bonds, can be maybe long-term kind of government bonds. The reason is you kind of need this a bit to balance stuff out. I know that most people always talk about how bonds don't work. Trust me, most people don't talk about when you have $1 million to invest. Bonds are obviously big of a question when you put 100% into bonds. I don't know, you can, if you put in 20% here and you can split it, you split it a bit into investable grade kind of corporate bonds, others are maybe government bonds. At the end, that really balances stuff out, and well, it just keeps a bit of peace and calm. And then I would probably go aggressive right now here on the Bitcoin side, right? My question here is right now, how much do you want to put into real estate right now, right? So I would probably put 0% in, keep the ones you have. If you have real estate, just keep it, let it ride, unless you're really overexposed, or if you're in a heating market, I would be a bit more careful, but just kind of focus on that. Then again, maybe put, I don't know, 10% here into gold, put maybe 10% here into metals. You can also obviously kind of mix this a bit if you want to. At the end, and we discussed this last time, right? Maybe here you want to have a third, or maybe you want to go to 40% here. That's all good. You can mix it kind of, and then, well, maybe, I don't know, put 1/3 here and then put 1/3 here, right? So then here you have your normal environment. Here you balance for a deflationary environment, and here you balance for the inflationary environment. Now, always remember, you don't know what's going to happen. All the idiots out there believe they know what's going to happen. They're really, really good investors. They know that they don't know. I guess one of the most important things is keep drawing your income from where you have been going. Focus on that. Focus on building your business. Focus on building that kind of side. And here, you want to just keep going on that track, right? I guess that's a very, very, very key concept. Now, let's look at the other side. And I think right now, this is uber difficult. So I would not want to be in this situation where I'm like, man, I just got this massive payout, or, I'm selling everything right now and because I want to retire, and now I have this $1 million. And my goal is actually just to grow it by inflation, and the rest I want to withdraw and I want to get cash flow out of this. And my golly, is this a difficult job right now. I really kind of want to tell you how this is so difficult. yeah, and the reason why it's so difficult is because cash flow is so difficult and it is low interest environments. So here, I would probably diversify. So let's do this, let's talk about cash flow now, right? And this, that's where it gets hard. So here, when I talk about stocks, here I would really look for solid dividends. And the reason is, if you have solid dividends, it doesn't matter how much the stock fluctuates, you will get your dividend. And if you have a solid, like maybe a dividend aristocrat or someone, like they're solid dividends that just keep kind of growing their dividends. So you keep getting the same kind of cash flow here, right? So I would really kind of focus on that. Obviously with bonds, here the same story. Here you just have to have a good mix of like actually getting returns and actually having some security, right? I mean, it doesn't help you if you go for junk bonds and then you get like 10% per year when maybe they go to zero, right? And you lose all your principal. Or it also doesn't help you to go only for government kind of bonds because then you get like 1.5, 1.6%. Both are really, really difficult, right? So, this is a tough one to be honest. So I would probably here only go for the 20%. Let's look at the others. Now, obviously here it gets interesting. Gold, I'm not even sure if I would go much into gold here. And I'm going to tell you why for a second, right? You might call me crazy, but Then let's talk about commodities. I'm probably not sure if I would invest much into commodities right now. Bitcoin, I think Bitcoin is the must because it's digital gold and looking forward. I mean, the physical world will never disappear. But gee, most of the things go digital, so I would probably here take a position, maybe get a smaller position, right? Maybe go for the mathematical optimum. Maybe here go for 6%. Just kind of working this out. Maybe here for gold, go for a smaller position, maybe go for 4%, right? So here, on the inflationary one, you kind of go for 10% here. And the reason is not so much that you kind of, you don't believe in inflation, it's more, you kind of really putting a lot of danger into your portfolio by having too many things that work really well in inflation because you need to draw cash flow out. And this is the massive lack here. In Bitcoin, yeah, Bitcoin can go like 20x, but it can also go down. And the biggest problem is that you need to draw money out of this account when it's down. And this is what always happens, right? Most people have money problems, not because during the times when everything goes well. It happens like March 12th, when the whole world was kind of in a meltdown and everyone's kind of grappling for money. And you know, those with cash, they buy Bitcoin, everyone else is selling. Like I got my cheapest Bitcoin in like 2 years, I think. On that one specific day, it was insane. This made over 150% per year. But that's because I had cash and others actually had to draw it out. So just kind of keep this in mind, right? And then here, I would really kind of consider some real estate, but purely for the cash flow. And I would not leverage this too much, right? I would make maximum 50% kind of money down, like maybe more, right? So just kind of keep this in mind here. And that depends also a bit on the region, right? If you live in a region that has some really nice deals, maybe here on a 50% down, I don't know, maybe you can get 5 to 8%. Maybe lock up the interest rate, right, for the next 20 years or how long you're expecting to kind of needing this, or maybe 30 years, right? And then, man, you can have some really nice deals there, because at the end you're like, okay, so maybe here 500K down, right? And maybe you net, I don't know, 5% out of this, so that's pretty nice already. That gives you 25K per year. Then maybe here's some stocks with dividends, totally different kind of environment, obviously, right? Here maybe you get 3 to 4% out. So let's kind of do the math here. So here, let's say we put 20% in. So let's use the lower one here. So let's use the 3%. So that would be another 6K here per year. Then bonds, man, if you can get like, let's say 3% per year, mixing a bit, you know, government grade bonds and investable grade corporate bonds, same story, 6K per year. Well, you get nothing out of Bitcoin and gold. But then here, let's kind of work this through here. Then we get 12, 25, so that's 37K per year. Plus you have some inflationary protection here, which is good. Obviously you would be doing quite well in a deflationary scenario, but that's where it gets really, really tricky. So that's kind of the cash flow scenario. At the end, right, and that's where you have a big decision to make here. Is this where you want to end up, or is this where you want to keep going? Now the story changes massively when you get $10 million, and the reason is very simple. At $10 million, most of the time, you can say, and we're going to talk about this in the next video if you want, you can say, you know what, I'm going to put aside 6 million, 7 million, and I'm just going to invest this super nicely, and it's going to do, like, it doesn't matter how well it does, but that's just going to be great in the entire kind of concept. And the other 2 or 3 million, that's gambling money. But the 2 or 3 million gambling money is more than someone in this scenario has, and obviously that changes the entire concept. It gets crazier when we talk about higher numbers. So there, the strategy changes completely. So just keep this in mind. I think this is really important. And yeah, let me know what you think in the comments below. Would always love to hear your feedback. If you don't want to miss out on anything here, then click the subscribe button, whatever platform you're following this or watching this. And yeah, I hope you get some massive value out of all this, as always. And yeah, if you want to get some nice returns on your crypto, check out my company. I'll post in the link. We're doing some really awesome stuff, Bitcoin lending. We just launched Ethereum, so check this out. We have DeFi chain live, so DeFi coming to Bitcoin. That's massive, really, really exciting. Yeah, and I hope you're gonna join in this. So with this, thank you so much. I hope you get value out of this. See you next time. Yours truly, Julian. Bye-bye.